So the 75 candlestick rule is basically using 75 candlesticks to analyze the market. Okay, so in this case we're going to look for the last 75 candlesticks. We're going to look at the 75 candlesticks zenye zimepita, and then we're going to analyze the market using the 75 candlestick rule. Okay, so this is the daily chart. From it tunaona market imekuwa ikitrend upwards. Sorry about that. So from it the market has been trending upwards. So based on that 75 candlestick rule, you need to get 75 days, because this is a daily chart, from this to be able to determine what you're looking at for market. Okay, so from this what you do is basically unakuja kwa your crosshair, select it. Okay, then from the point unataka, this is the last candlestick hapa mwisho, tunataka kuget 75 candlesticks. Okay, so yeah, 75 candlesticks itakuja around somewhere hapa at this candlestick. Okay, so this is what you have from the 75 candlestick rule. This is the daily time frame. Then kuja select the vertical line, drop it from the point unataka ku analyze the market. Okay, so this is what you should have. Okay, so from this you're going to analyze market, you're going to get your analysis from this. So based on that tunaweza chora a simple trend line somewhere hapo. Okay, then there was this point. So based on the 75 candlestick rule, this is what we have. Then using our supply zone and demand, tuko na hii point. Okay, tuko na this point. So from this tunaweza sema market was in an uptrend. There was a breakout, then a retest that failed. Okay, the reason you may fail is because already sha break the previous the previous supply and demand zone, or the previous resistance as a resistance. Okay, so you can see this, so it's already violated. So tuko na a few options. From this tuko likely kuona market ikienda juu, chances za kurudi chini ziko minimal, so we're going to assume this trend line and look for something else. Tuko na something of this nature from around hapa to this point. Okay, so you can see tuko na another trend within, there is another trend and we can see from this. Okay, so yeah, from this tunaweza sema market most probably we have an uptrend based on this. Okay, 4 hours, what do we have based on the 75? In short, it's using 75 candlesticks to analyze a certain market. Okay, so we can delete that. Kama see clear, you go to another time frame. So we're going to go to the 4 hours and get 75 candlesticks from the 4 hours. Okay, so crosshair, kuja kwa whichever candlestick unataka. 75, the best inakuanga daily for sure. Yeah, 75. The best inakuanga using the daily chart, but if ikupati something good, you can always, let's just assume hapo. So based on this, what do we have? The highest point, the lowest point. Okay, then tuko na these 2 points hapa. then tuko na this point, something of the sort, not the best, but based on this is what we have. Do we have anything clear? Nope, nothing. But tunaona market at least iko in this this resistance zone. Okay, so hapa tuko na two options, either market break this point ndio iendelee kwenda juu, ama to expect hii market ishuke mpaka around hapa. Now based on that, do we have a trend line somewhere? Not the best, but yeah. Okay, so to analyze market based on 75 candlesticks. It's important, sana. You'll never, it's not the best thing to use, but it's good to at least kuelewa, because based on those 75 candlesticks itakulimit angalia on at the bigger picture. So you can see from this tunaweza chukua this sort of trend hapa. Okay, so using the 75 candlesticks itakulimit to some sort of way, but it's still important to understand. Okay, then the crosshair, just to explain the crosshair, what happens ni select, just come to your chart, just select it, see the drag and drop ama sija drag anything, it's just selecting. Then ukuje kwa chart, you want to understand how many candlesticks, so that's where you hold your right left click, then drag mpaka point unataka. So unataka kujua how many candlesticks was that drop, so those are 10 candlesticks, those are 4 hours 10, hizo ni minutes sijui ngapi. Then tuko na 196 pips, then the price. Okay, tulisema when it comes to the pips, you assume the fourth decimal point, you assume the fourth point, so it's 196 pips and 1964 points. Okay, so yeah, that's it. Then one thing you guys need to know, ikikuja to search markets, as you see, don't look at just the 75 candlestick rule. Yes, it's all good and all, but it's not the best. Okay, then after that, okay, yeah, so don't use just the 75 candlestick rule, go for the bigger picture, go for the entire chart. But 75 candlestick rule, kuna time itakam to pay off sometimes. Then plotting Fibonacci. So how do you do it? I'm going to give you the basics, because personally I don't even use a Fibonacci could trade that much, but I'm going to give you the basics of Fibonacci. So you need to read more about it, but basically it's the golden ratio. They call it the golden ratio. So it's used to kujua, we have the retracement, which gives us at least we're going to use Fibonacci retracement kukwambia where the support, where the market is likely to retrace mpaka. Okay, so let's say we have a trend. Now you have your points za Fibonacci. Those points act as support na resistance za a certain trend. Okay, so if a market itashuka ama if a market ita retrace, if this market ita retrace mpaka this point, then Fibonacci is likely to act kama support na resistance. You have to understand, sijaipatana na any market ati tunaweza sema Fibonacci is the most accurate thing. So it's something to just add on to your trading. Okay, then Fibonacci extensions, that is what we use ikikuja to targeting. You want to know the market will retrace to this point, what is the likely target for me? Hope I'm making sense. Fibonacci extensions, they used to set take profit. Retracements zinakuanga poa za kujua pullback imefika what percentage, so are we likely to see a retracement. Okay, so insert Okay, then Fibonacci, tuko na retracement. So when it comes to drawing easy retracement, you run it from mahali market ilikuwa previously to mahali market ilifika before ianze ku retrace. Okay, so what I mean ni market ilikuwa in some sort of a sideways market, so we're going to draw a market Fibonacci yetu retracement from this point to this point. Okay, so we can see already it's a 50% retracement at the initial trend. Okay, let's look at this. Just a minute. So we're going to look at this. So here market, we have this, tunaweza sema this swing, then tuko na swing ya pili. So you run it from the swing highs na swing lows to the other point, ama from this point to this point. See that? Then market ikakuja ikarun from this point to that point. So kuna phase 1, phase 2, then tuko na phase 1. See that? Then we have phase 2. Okay, so by now you understand lower lows and lower highs. Okay, so this is lower low, lower high, lower low. Okay, so tunataka kujua, tumeona mark hapa ita retrace, ndio? So we are sure there is a retracement going to happen hapa kwa market. So how do you determine, ama how do you know that market ime retrace ya kutosha? Okay, so you come and plot your Fibonacci retracement. So from this swing, tunaweza select this point. It's just the best fit. Okay, so we're going to use this highest point. Okay, so we'll move to this point before the retracement. Okay, and then there was a retracement of 50%. You see that? So that's how you determine kama market iko likely ku retrace, ama ikikuja kwa kuingia market, let's say tuna expect your market ita retrace 50 to around 38%. Hizi ni percentages: 61.8, 50, 32, 38.2, 23. You can never be certain of the number ama the percentage of a retracement. Okay, so that's why I avoid using Fibonacci. I'm not certain kama you guys understand more about it. That's up to you guys, but personally I don't like it sana, because you can never be sure kama ni trend may change ama ni retracement ina happen. Okay, unless there is more ama there is price action involved. You can see that, but basically kuchora your Fibonacci retracements, it's that simple. Then tunaweza chora hii from this point. Okay, so tujue a retracement, what is the retracement? Yeah, this bigger trend. So this is 38.2% retracement. You see that? But Fibonacci, it's a good assist, but you can see this. This is a 50% retracement. Okay, but what happens ni ukitaka kutumia Fibonacci retracement in the best way, yes, one thing you need to be certain, you have a trend. This is a downtrend. No, we are certain this is a downtrend. We expect market iende chini. So that is the first point. Is it a downtrend? Is it an uptrend? Don't use it kwa sideways markets, not the best. Consolidations na ranging markets, don't use your Fibonacci. Unless umefanya more to it ama umesoma more to it, then come and place your Fibonacci retracements. That way itakuambia mali market iko likely ku retrace mpaka. Okay, so tukisema 38% retracement, this is the point. Okay, so what happens, what I do, ama what personally I'd say you do ni, once you realize market ime retrace to a certain percentage na una expect sasa ianze kushuka ama kupanda, it's simply you look for reversal candlesticks. Okay, let's look at this. So not the best, but yeah, So tuko na insert Fibonacci retracement from this point. So you can see hakuna swing highs na swing lows, but you can do this. Okay. Then the other thing, you can use it to set your targets. Not the best, but if at all tutaona hii market break this point, then unaweza ona imerun to 100%. Okay. So if itakuja break upside, then expect your market inaweza run to 100%. Okay. Before a retracement, ama inaweza break that 100%. Then retracement itakuja kwa that Fibonacci 100%, which will be acting kama our previous resistance yenye imekuja kuwa our support before this run. Okay, not the best one, not necessarily at itafika hapa, but sasa that's where the supports na resistance zitakuja. Then one thing with plotting hizi Fibonacci ni every day you're going to spot a new swing. So yeah, Fibonacci, not the worst, but not the best. Okay, so we don't have a trend hapa kwa USD card. So what happens? You assume it. Okay. So you can see this based on this 38%. Then it's going to appear kwa the entire chart. Okay. So if at all tutaona hii market ikiamua kupanda, tunaweza iona huku, but not necessarily. Okay. Delete. Any questions? Because niko sure kuna questions. Any questions ama tuendelea? So what I was going to show you guys, ama what I basically will show you guys ni ukianza kuchora retracements, it's the swing highs na swing lows. Okay, kuna strategy, you've heard of strategies on how to trade using Fibonacci points, but personally nope. So the basic thing you need to understand is how to draw it. Let's look for gold. Gold. Yep. So we have gold. Kuna trend natafuta. Yep, it is. So this point. So yeah, so that is what we have on gold. So yeah, tuko na this swing, this is destroyed. Tuko na hizi points, that point. We have this point. Then tuko na hii point market ili race. Then we have this point. Okay, so tunataka kujua what percentage of the retracement is this. Okay, so insert Fibonacci retracement, market will move from this point to this point. Okay, so keep that in mind. Unachora from point market ilikuwa previously to point market ilienda. Okay, so you can see this is a 61.8% retracement. Gold, you don't count it as pips. Gold on account kama points. Okay, there are people who will talk about pips, but personally, or from what I've learned, gold, you don't speak about pips, you speak about points. Yes. So anyway, gold ndo inakaa kubaya, if anybody can see it. But we need to see that price breaking that 8%. 23 would be a good entry. but not the best. But anyway, you can see this. You can see how Fibonacci acts as support and resistance. So when at this point, then it's not the best. It's not the most accurate thing. Okay, because you can see all these violations. That is how you look at perfection. You need to find the best fit. You need to find something that you can use without uncertainties. So let's look at this. We're going to delete the Fibo. Okay? Then tunataka kujua this target. We're going to look at this target. From this point, tuko certain tuko in an uptrend. So tunataka tumejua retrace to this point kwa trend line. So tunataka kujua where to set our target ama where the market is likely to move to. So what you do ni insert Fibo tracement from this point. Come on. So yeah, double click on it to ukitaka kuedit. So you can see that. So this retracement, oh, sorry about that. So this retracement, tungeset our target hapa. Okay, but ili move juu. Hope guys you can see this. So I hope you guys can see this. So yeah, ungekuwa umeset take profit yako, well and good. So Fibonacci extensions. Extensions sasa ndio unatumia ikikam kuset you take profit. Extension si lazima utumie extension nyingi but so yeah, tunataka kujua there's this retracement, ndio ama there's this market. Let's just do this. Tuko in an uptrend, ndio, then there's this pullback kwa trend. Tunataka kujua where the next target is most likely going to be. Okay, so what you do ni insert Fibonacci expansion. Okay, so from that swing unataka kujua ya target ya this. Okay, so double click on it mpaka mahali retracement ilikuwa hapa, ndio. So if you're going to buy at this point, okay, and your stop loss slightly below, your target itakuwa, this is target 1, okay, this is target 2, and this is going to be target 3. Okay, so I hope I'm making sense. Hope inaingia. So Elliot's wave, I'm going to send you an article. Hiyo ni MT5 na if we're going to do it tutaifanya afterwards once we're done with everything else, because it's not the most important thing. It's a skill you can learn at on your own. Okay, then linear regression. So what you need to understand with linear regression means it's simply a weighed option ama a weighed trend line na support. Okay, I hope I'm making sense. Not really trend line and support. It's a weighed trend. It's a weighed direction, yeah, trend. Okay, so let's take, for example, we have this downtrend. Okay, so the first thing is you drop the lowest point, the highest point, the lowest and the highest point. Then you have to realize uko na a certain trend. Okay, so tuko in a downward trend. So kuchora your linear regression unakuja kwa insert. Okay, then inakuanga kwa channels, linear regression. You run it kama ni downtrend, you run it from the highest point to the lowest point. So this is our lowest point. Okay, so you can see what happens. Market in a move in this trend, okay, then there was a breakout. So sasa hapa, this is where your technical analysis tells you have to think, otherwise you have to think of what's really going to happen, and to some sort of way think you currency inakaa kubuy, but very uncertain about it. But you can see that, okay, from the highest point itakupatia an overall what is really happening kwa market. Okay, so the moment you see ime breakout hivi, that is the moment you start thinking about the trend having changed. Okay, but in real sense bado kuna some sort of a downtrend. Okay, so we're going to delete that linear regression. Okay, then we're going to get this other point. There's like a trend, some sort of a trend hapa. It's not the best, but you guys get what I'm trying to show. Then tuko na the highest point around hapa, I think, at the lowest point. See that? So we're going to insert our linear regression. 10 minutes. So insert channels, linear regression from the highest point to that lowest point, which is around hapa hivi. So yeah, see that? So tuko certain market itakuwa within hii trend, but if you want to make it perfect, lazima utumie your trend lines to get the best fit. Okay, so tunaweza ona hii market imebuy mpaka this point, then endelee kusell. Okay, then ukirealize this certain trend, cheza tunayo, keep on changing and trying to get the best out of it. Okay, so yeah, get a big trend, get a very big trend, you're in luck, because you will make a lot of money out of it. Oh, interesting. So yeah, any questions? Ukitaka ku delete anything from your chart, what you do is just right click, objects list, kuja select whichever you want to delete, then delete it. So linear regression based on this, tuko na the lowest point. Mali trend ilianza, we're going to focus on hapa. Because if we go, if to focus on this, okay, yeah, we can actually go lower because of this point, that point. So you can see something of the sort, not the best, but yeah, we have that. So yeah, tukona hiyo. So insert, then the lowest point and the highest point, something you can always check for channel linear regression from the lowest point to the highest point. Highest point yetu ni hapa, okay? So tuta drop on that highest point. So there you have it. Uptrend, but there is another, unaweza chora trend line to get the best fit, of which not the best thing. The best thing ikuja kwa market, trend lines, support, supply and demand zones. Yeah, those are the most important things ikikuja to technical analysis. So any questions for 7 minutes, and then we'll be done for now. So what I'll tell you guys to go and do is you go on and find, I'ma go and look at this book, the Pips Masters Handbook. Then try and understand the candlesticks, okay? These formations, this bullish engulfing, this doji, there are 3 main candlesticks, only 3 main. ndo unapata all these other candlesticks. So try and get those 3 main candlesticks. Then you can look at this trend continuation, a trend reversal pattern. It's not right now, it's important sana, but what you really need to do is, you can look at all this. It's what we're going to be looking at next week. Okay. But for now, any questions? Fibonacci. Yeah. Any questions on today's? Ama kitu hujaelewa, something you need me to explain? Ama you guys are good? Come on, you're good. We can just end it. You guys go on and have a good night. So yeah, I think that's it. For anyone willing to learn more about Elliott wave, I'll tell you to download your MT5. Create a demo account now. MT5. It's way easier. It's way easier than plotting it qua MT4. Alternatively, to many trading view. Trading view is also amazing. It really gives a lot. So Fibonacci. Then the other thing I can tell you guys, you see this dialog box. What you do is just go on and edit them. Okay. So personally, this is what I have. You can see I have my Fibonacci. Easily accessible. Niko na my linear regression, easily accessible. Okay. Niko na my supply rectangle na triangle, easily accessible. So nikitaka kuchora anything, it's just fast. Okay. So try and edit this and filter out what you don't need and get what you need. Okay. So
okay, I've got a question. Now, when we are looking at the support and supply and demand zones, okay, what to confirm that it's going to turn? We only use the reversal candlesticks, or there is another?
What I'd say ni ikikuja ku reverse, you always look at what the market. Okay, I don't even know how to explain this, but you'll always find, let's take for example this, you need at least a confirmation from the candlestick. Okay, then utapata pia trend. Kama the trend is a downtrend, you don't expect your market at it reverse sana, you get. So I don't know how we can do this, but basically let's say we have a downtrend. Okay, let's take for example the downtrend. Okay, if you have a downtrend na tuko na supply na demand zone somewhere hapa, okay, then hii market ilikuwa ina move hivi. So you definitely expect your market ikifika this point ita reverse. You see that?
Yes, yeah.
So something kama hii, so itakupatia better entry ya the position. Okay, so this is what we have for market. Let's say this was an example. Let's take this as an example. We have this downtrend. Market retrace imepatana na supply na demands on this point. Okay, the previous inaitwaje support na resistance imekuja kwa your resistance. Your support, previous support imekuja kwa your resistance. So there is a more likelihood ya kureverse at this point na iendelee kumove chini. Hope I'm making sense. So yes, there's so many things lazima you factor in.
Okay.
Any questions? Any other question? So you're based on this. So come at this Euro USD. Let me just do this. For us to get a confirmation that market ilikuwa ina sell, ama market inge sell, there are a few things we had to look at. You know, tuko na some sort of a trend line hapa running. Tuko na around 1 minute. Tuko na that trend line. Okay, then tuko na hii supply na demand zone around hapa somewhere. See that? Then tuko na hii point somewhere hapa. Yeah, I think we can go for the bigger one to make it easier. So tuko na, we have this. Okay, so market ikifika hapa, there are a few things you have to consider. One, then tuko na, we can place hii point. The first thing is market may break from this trend. Okay, this trend line and inashuka, so it may break out na ime retest. So that is option one. Then ukiangalia market ilipanda mpaka this point after that retest. Okay, then lazima ufactor in, we have this supply na demand zone around hapo. Okay, so that is option two. So tuko na two contradicting options. So what you do is you wait for something clear to come in. Okay, so in this case ukiangalia kwa 1 hour we had a mini trend, something kama hii, something, we had this. Okay, so with this kwa certain market itakuja bounce from this point ibuy. So what we'll be looking at ni reaction ya market ikifika this point, and for a good entry atungeingilia market hapo, tuliingilia market hapa. This was yesterday. I think niliambia watu waanze kufikiria about shorts. Okay, so this is the point of interest.